All right, so we are here at Rocco's with our next guest for the Boom Room Unfiltered episode number 10. I'm here with a friend. His name is Dmitry Shamis. Welcome.
Thank you.
I appreciate you coming out and meeting us here at Rocco's on this beautiful rainy day. So Demitri is not only a friend, but he's also our in-house lender for the Bograd team. I've known Demitri for how many years now? Probably, I don't know, a long time. You went to school with Maxine. So Demitri went to school with my wife, and that's how she knows him. But I know him just by being in the business and the same circle of friends through the years. And I never really sought out an actual lender, and Demitri is one of those non-pushy type of lenders. A lot of these lenders sometimes call you and pester you, and I've seen it all, and the proof is in the pudding with Demitri, and knock on wood, I've never been led on to believe that I can get something done, and it hasn't gotten done. So I give you kudos for that. So I appreciate your tireless, effortless ways in this industry. But I really applaud you. You've been really instrumental to a lot of our clients, even client that you're meeting later today. So I appreciate all your help with that. But the funny thing is, as long as I've known you, I really don't know how you got into the industry. I know that you're an attorney by trade. So I guess tell me a little bit about your whole beginning of getting into the career. Or better yet, tell me, so you were in Council Rock.
Yes.
And you graduated what year?
2000. That's a good question. I think it was 2003.
2003. So you finished Council Rock South, right?
North.
Oh, okay. So Council Rock North, 2003. And out of Council Rock, what was your next step?
So basically the way it started was I got into mortgages as a telemarketer when I was 13. So started that, did that.
Who are you working for? Do I know?
Penn Funding initially. Worked a little bit with Liberty One.
Okay.
Back in the day.
Okay, I know them. I know those guys.
And then we started our own branches. I was a branch of Premier Mortgage during the boom, 2003 to 2008. And then I left mortgages to go to law school.
So you got into law school after you got into the mortgage industry initially.
Yes.
So you're a telemarketer, and then you were doing some underwriting,
No, just basically doing loans. And then
so you were a loan process. You were basically you're a mortgage consultant.
Yeah.
Okay.
Yeah,
so you're a mortgage consultant
off.
from 03 until 06.
08.
08. Okay.
Then I got out.
The market tanked.
Yeah, I was actually doing very well back then, but I got out. I went to law school. And then out of law school, by chance, I got pulled back into mortgages. So this was in 2012.
So you went to law school in 08?
Yes.
Okay, what law school did you go to?
New York law.
So you went to New York law, you got your law degree.
Yeah.
What kind of law are you going to do?
I focused on finance, and business, and real estate.
Cheers, enjoy.
Cheers. Wow, you guys are fast.
Really quick around.
You guys are very fast. Okay, cool. Bon appetit. You finished law school in 2012, New York law, and the next step from there?
The next step from there was I, by chance, got back into loans as a branch manager, and that's where I've been essentially since then. So another figure, 12 years since.
So basically, you got into the loans from that point on, and that was it.
That was it.
So, but you like the lending industry. You never wanted to get into real estate. You got your law degree, but you never practiced law.
Nope, never.
But you didn't want to get barred in Philly or in Pennsylvania or any other states?
No, just basically the lending aspect of it, private lending or, regular conventional lending. That's, for me, was where it was at.
Okay. When you got into lending, what was it that you liked about the lending industry? What was that?
Just the ability to read guidelines. It's very similar to law. Law, you have a set, there's elements to something. You either have them or you don't, and you advocate, is this the case or this is not the case? Mortgage guidelines are the same thing. On anything, there's guidelines, there's the black and white, and there's where, it's up to seller discretion or lender discretion.
Gotcha. So you got into the lending industry, you were loving it, you got back into it in 2012, and you've been doing it ever since.
Yeah.
So I know that you also do some hard money lending.
Yes.
And so for people that don't understand what hard money lending is, if you want to explain.
Basically, hard money lending, just the simplest ways, is for people that can't get regular conventional loans.
Right.
So generally the deals make sense. It's just that they don't fit some rubric to get conventional loans. It's always on investment properties, and generally they're done as business purpose loans or investment loans, and it allows people to access capital that they normally wouldn't have access to under normal guidelines.
So in a perfect world, not a non-perfect world rather, somebody can get financing. They're buying a shopping center for say $1 million, and they're having a tough time getting financing from the bank. What would be like an example of the kind of terms that person would be offered by you as a hard money private lender?
Good question. So here's your answer. Essentially, it could be anywhere from 20 to 30% down, 1 year term, and the interest rate could be anywhere from like 12 to 15% annual.
Okay.
While that may seem high, it's just that for these people, and the deals make sense, is that they just aren't going to get it otherwise.
It's a stepping stone.
It's a Band-Aid.
Right.
It's literally a Band-Aid so that you can get into the property or into the kind of like shopping complex, so that you can get it, and then it gives you the ability to work out of your situation, whether it's fixing your credit or doing the right taxes or anything, so that you could refinance out of it into a regular loan.
But the purpose of this hard money loan is a temporary solution. It should never be.
Yeah, they're all 1 year or 2 year terms.
Yeah.
That's it.
And if somebody, God forbid, has to be in there longer than that, that's what they're.
It's not so bad. You always generally can get extensions, so you can pay to have an extension for a year. There are quite a few people that pay for extensions, to go on, but generally the realm of the loan is a 1 year term.
Now you're doing the hard money lending. Is that a lot of what you do on a daily basis, or is it mostly?
It is.
So is it mostly like conventional lending, or is it a little bit of both?
So in my branch, other people focus on conventional. I just focus on the hard money aspect.
So you're basically more hard money than anything.
Yes.
So when I'm giving you clients, that's something that you're not doing as much of.
No, I'm overseeing it, but they're being allocated to other essentially loan officers in my branch.
And I know you're licensed not only in Pennsylvania, you're also licensed in.
We're licensed generally, I think, in like 10 states on the East Coast, and expanding for more.
So are you trying to do more like? So what's your ideal candidate? Is it is it anybody, or is it somebody that has?
It's truly anybody.
Anybody. Okay. But you used to be with. You just opened this Next Bright, right?
Yeah. It's actually Kirk opened it.
Oh, Kirk opened it. So you have a partner who's in California, right?
Yeah. So we have a branch of NextRes, which is the commercial aspect, and Lendbright's the conventional arm.
Gotcha. So what do you see? I guess this is a good kind of getting into the next part of the conversation. What do you think with what's going on right now in the present economy? Where do you see the mortgage industry, the real estate industry going with this new administration? In my opinion, over the last, let's say, 6 weeks, demand has gone through the roof again. With anticipation of Trump coming in.
Whatever it may be. But in generally speaking, it's probably Trump.
Right.
He's considered good for the economy. If he's good for the economy, then people feel a little bit more comfortable with.
What do you think? Do you think?
I think it will be better for all of us.
Okay. So what do you, if you were to have a crystal ball, and you're looking at this pokey ball right now, what do you foresee 12 months from now?
So I'll tell you this much. So I think over the short term, rates are going to go up.
Okay.
Because again, it's called the Trump trade.
Because they've been going up.
They have been going up. They went up about a full percentage point since the end of September.
So I'm going to stop. I'm going to go backtrack. I want you to explain if possible, because I think people are a little bit confused.
Okay.
When they hear the Fed meets every month, and they have the meeting, and the last few meetings, the rates have actually they've dropped them a quarter point. People are under the impression that rates are down.
Correct.
That's not the case.
No.
Can you explain, for the common, consumer out there, because I think people want to understand or need to understand what that actually means.
Absolutely. So basically, generally speaking, how this works is like this: the Fed meets every month or 2 months to do rate cuts. By the time they meet, there's already baked in expectations on what they're going to do.
Right.
So generally speaking, I get tons of phone calls from other people that say, listen, hey, I heard the Fed cut rates, when can we refinance? Unfortunately, it doesn't work that way. The way it works is essentially it's all baked in. So there's something that the Fed Reserve releases called the dot plot.
Okay.
And it shows you where the rates they think are headed.
Okay.
Over the last few rate cuts, that's been the most important aspect of their rate cuts. So while let's say they cut the basis by 25 basis points.
Correct.
All right. That day rates actually went up afterwards. Again, this is all baked in. So what the Fed is looking and what the Wall Street, which is dictating the interest rates, they're seeing what their expectation is where the Fed thinks the rates are going to be over the next 12 to 24 months.
Okay.
That's been the most important factor at play. So every time that the Fed's been meeting to do a rate cut, it's already all been baked in on the mortgage side.
Okay.
So it all comes down to what Powell says in the meeting afterwards, and it, generally hasn't been favorable for rates.
Right. So again, last month they decreased the rates by a quarter point.
25 basis points. Yeah.
Right. So now they're supposed to meet again in about 2 weeks or 3 weeks again. So what do you think is going to be the forecast for the rest of the year? You think another drop before the end of the year?
I think there's going to be less cuts. The expectation is that there's going to be less cuts because they're not seeing that the economy is in bad shape.
So I was going to say, the reason they're doing less cuts is because they feel the economy is doing well.
Yes.
If the economy is doing poorly, they probably decrease the rates further to get more of an influx of money into the economy.
Absolutely.
So, and again, that's interesting because if you talk to most people that are pro-Trump, they're saying the economy's bad, the market's bad, look what's been going on for the past 3-4 years, that's why we need Trump. In reality, the economy is doing pretty well right now.
Yeah, the economy's not doing anywhere as bad as people say.
So why do you think there's this illusion that people have that the economy's bad?
I mean, if you talk to general people, there's a lot of people out there that are struggling, that they have a lot of maxed out credit cards and so forth. I mean, I talk to those people, I'm sure you talk to those people and so forth. However, it's not really being shown on the numbers that are being released on CNBC or anywhere. So, I mean, I don't know if those are real numbers or what they are.
From what I've read is that credit card debt is at an all-time high right now.
It is.
Yeah. So credit card debt is high.
Yep.
Rates are not doing much.
No.
The stock market's at record highs.
Yep.
Interest rates are at record highs.
Approaching. Yep.
But and the real estate industry, I mean, I don't know. I've, knock on wood, my last 6 months have been pretty steady, and we're doing better than we did last year.
Right.
I can't say we're doing as well we did in post-COVID, but we've been on a steady trend up. Why do you think people are so unhappy with, again, everybody's saying we need Trump because the economy is so bad. In reality, the economy is doing well.
Well, again, it comes back to who do you believe? Do you believe the reports that are saying that the economy is great, or do you believe individual people that are saying? Okay, so that question I'm going to ask you again is that if Powell if he's dropping rates by 1/4 point, and he's doing so because he feels the economy is strong, so then the economy is probably strong. Based on every economic report. So the Fed recently came out and said that they're specifically going to be watching the unemployment claims and the non-farm payroll, which is released on the first Friday of every month. That report has not been bad. It's showing that the economy is growing, that there's jobs being added. So again, if you want to believe the economic reports that keep coming out, our economy's not doing bad. If you want to talk to Main Street, America people, there's a lot of people out there that are struggling, that can't afford their mortgage payments, that can't afford this, or there's quite a bit of them.
Are you seeing a lot of defaults right now versus maybe 18 months ago?
No, defaults are pretty contained.
They're contained, right? So you're not seeing these short sales or these foreclosures popping up like we used to.
No, but I am seeing, let's put it this way, when other people are running credit reports, they're seeing maxed out credit cards. A lot. More so than before, let's put it that way. I mean, that it's got to tip at some point.
Well, all that money was printed back in 2021, 22.
Yeah.
You think people are still living off of that money? Or now that money is coming to an end, and that's where the maxing credit cards?
The money's coming to an end, and unfortunately, you have to pay for your life somehow. And if you don't have the money, then you're probably going on credit.
So some people, obviously, when they're in money troubles, they start refinancing, taking lines of credit against their house. Right now, to take a line of credit against your house is stupid money.
Right, and the thing is, most people don't want to lose their
their low interest rate.
And I read somewhere that I think 80 or 85% of the U.S. at the moment has an interest rate at 4 or lower.
So when I hear that, it kind of more or less solidifies the fact that most likely there'll be less and less short sales because people can afford to pay because the rates are so low. People don't want to leave and sell their house or refinance because the rates are so low.
They'll probably just default on those credit cards, but they're not going to default on their house. That's what has been happening a lot.
So back to my original question before I interrupted you. What do you think 12 months from now?
I think that initially the rates are going to keep going higher, and I think at some point next summer they're probably going to be a turn for the better in terms of lower rates.
So you think around the summertime? Because what I'm thinking is that right now, Trump coming into office in the next 6 weeks, or whatever, 8 weeks, whatever we're going to call it, it's still going to be all the policies from the Biden era, Biden, Kamala. So it will be hard to kind of gauge what's going on, at least for 8 to 12 months.
It takes time to kick in.
Right.
Yeah.
Gotcha. Okay. And your thoughts behind this administration in regard to what they're going to do? What do you think?
I mean, they already said they want to make housing affordable again. So what does that mean? I don't know, but I don't think it sounds too bad for us.
I hope not. I hope not. I appreciate you taking the time today and talking about the real estate market, lending, Miami market, the future of the United States economy, and hopefully our viewers can get a sense of what to expect in 2025. But again, thanks for joining us here with Dmitry Shamis on the Boom Room Unfiltered. Like, subscribe, and share, and we'll see you in the next episode. Thank you.
Thank you, Joe.
Thanks, buddy.